Hello and welcome. You're watching Closing Trades on ET now. I'm Anisha Jain, and for now the market has taken a turn for the worse because yes, we were at the highest point of the trading session, close to that 20,200 mark, but a correction of almost 50 points from there. And right now we are meandering around that 20,150 mark. In fact, that's been the zone that the market has been largely toying around with. So that 20,150 is what we are watching out for. Separately, what else is happening in the market is the roaring rally which is there when it comes to the PSU banking space. There's no stopping that rally at all. Look at that solid 4% move coming in, and this is after that 7 to 8% up move that we saw in the PSU banking index in the week gone by. So an additional 4% coming through. Of course, it's hit a record high yet again. Central Bank, IOB, Bank of India, PNB, Bank of Maharashtra, pick up any of these names up anywhere between 5 to 20%. So that's the kind of momentum. The momentum is also quite visible in the auto stock. So of course, M&M is something which is doing quite well. In the last 2 minutes, there's a perk up in some other names like Titan, etc. as well. Having said that, the broader markets are a bit skittish. So not very strong cues coming in from there. But overall, it's a decent market that we have for ourselves at hand, especially given the handover that we've got. Real estate, metals, IT, these are your key underperformers. So of course, real estate has been the best performing sector so far for the year, but right now it's underperforming in the trading session. But let's try and decode all of that with our guests on the show as well. Naresh Marani, Kunal Bothra as well as Varun Sabu join us on the show to talk to us about the way forward. Kunal, let's begin with you. It's 20,150 that we keep toying around. When are we likely to head above the mark of 20,200?
Well, hopefully soon. Today, I think the mood of the market is a bit somber because my sense is that most of the large cap names like HDFC Bank, etc., most of these large cap stocks have taken a bit of a back seat. But on the other hand, I think the market texture is still buoyant. You've seen so many large caps and mid caps still getting to a breakout. PSU banking stocks looking quite strong, charged up for many of the names. Even after such a kind of a strong up move, then you have large cap stocks like Titan, etc., which are also doing quite well for themselves. So there are a mix of large cap names which are looking strong. There are a mix of mid cap names which are looking quite attractive. It's just that the index is a bit somber because of the handover from the global markets. But I still expect that hopefully in the next couple of days, we should probably come back to that 20,200 mark. But I think the more important index which I would be bullish on would be Bank Nifty even from current levels.
Bank Nifty continue to be quite bullish. Wanted your take, Naresh, about PSU banking space. Of course, today the fag end of the PSU banking names which are doing okay. IOB, where you only highlighted that the free float is very limited. Even other names for that matter. Which are the stocks you would still want to bet on, and which are the stocks you would completely stay away from in that entire PSU basket?
So I would completely stay away from the smaller names, which is where the float is terribly low. Floats of 2% in a IOB. IOB is now at a market cap greater than Canara Bank, PNB, as well as a Union Bank of India. Same is the case with the Uco Bank and other names. So the place you want to bet is one, State Bank of India, because that is coming back closer to 620 mark, which is the previous top. So if something which looks still relatively interesting is State Bank of India, and then maybe if you want to play momentum, there is Indian Bank, purely for the fact that this is one of the only PSU banks which is say 2-3% away from an all-time high. Other names, the smaller ones which are going berserk are still down 40-50% from the highs made in 2007, 2015, etc. But if you look at an Indian bank, the stock is closer to an all-time high. So that's a trade where one would have a strict stop loss at 410 and could play some momentum. But I would go with State Bank of India. Also, the fact that Can Bank and PNB and Bank of Baroda, which I used to like, have already moved up quite a bit. So the only place where the risk reward is still left is State Bank of India and then maybe a Indian bank.
Okay, point taken. Let me also highlight some of the stocks which are buzzing around on news flow. So let's pull up the stocks and news. Bharat Electronics from the entire defense pack is quite excited. The company specifically won orders of almost 3,000 crores from Cochin Shipyard. But other than that, Defense Acquisition Council managed to approve 45,000 crore worth of projects over the weekends. Of course, the entire defense basket is doing quite well. Vodafone-Idea, that stock has taken a tumble for the worse. When we started off the trading session, it was well in the green, started with a 2 to 3% gap up. Right now, it's lower by 6%, so correction of almost 9% on an intraday basis. And that's because the company clarified to the exchanges that the reports regarding getting acquired are incorrect and they're not in any talks with the likes of Amazon, etc. So clarification coming in there and reversal of move. Tata Steel, of course, the other one, which has announced the restructuring of the UK business. Yes, it's getting that additional 500 million pound from the UK government, but there is this uncertainty regarding the employee headcount, reduction plans, and that's the reason that stock has cooled off as well a bit. Varun is also with us. So Varun, let's start by discussing the defense stocks if we can. Which are your favorites and what are the house views on defense as a pack?
Don't as such have official coverage on defense names. But yeah, if one has to ask my opinion, I think the better names would be HAL, Hindustan Aeronautics, or BEL for that matter. Yeah.
What is the right way of looking at defense? Because order books are there, big picture in terms of government commitment is there, private sector is also getting a lot of business, and the fact that we are looking at a multi-year cycle. What is the best way of looking at defense? A great story but expensive stocks, or right now stocks are up, but the long-term story is also intact?
So the good part about our market is that so we keep rewarding growth, right? And considering how the geopolitical situation has been globally and the kind of focus that our government has gotten towards defense, it's very clear that this order booking story, not only domestically, but also in terms of exports, is going to become bigger. And India is gaining a lot of grounds, particularly when we are seeing orders coming across the globe towards India. And we are proving it that, the kind of technology we are upgrading into, we are going to be making a big mark in terms of defense globally as well.
Okay. Kunal, should one just avoid Vodafone-Idea? This is one stock where it's patronized by retail guys. It's just patronized for the 10% move. It's a 10 rupee stock. 10% is 1 rupee. That's a big move. And if you get the trend right, 10% in Vodafone-Idea is not a moonshot. It is something which has regularly happened in the past.
Yeah, it's regularly happened, Nikunj, but then the idea is to try and position risk also along with it. So, in fact, on a day like yesterday, that's on Friday, the stock was up 10%. I think 11.8 or 12 is where the stock had reached. Today, the stock is sub or just hitting that 11.2 odd mark. So, attaching risk to these kind of stocks it just goes out of the normal statistics which you look out for. A 20% swing in a short span of time can, skew the positions, and specifically, in such kind of stocks, you don't buy smaller quantities because it's assumed to be cheaply denominated. We tend to, retail traders tend to buy a higher quantity, and then the risk, once it starts to get factored into the stock price, we see a sharper correction to the stock and just, goes out of the normal statistics which you look out for. So that's the only reason why I typically avoid such kind of names.
The story is smaller PSU banks, and remember, in smaller PSU banks, the big concern is that a lot of these banks are held very closely by government. After the recap and after the entire way how banks were rescued, the government holding, because the government pumped in capital, and when you pumped in capital, you did it via the equity route. The government holding in some of the stocks like, I think Uco Bank, Bank of Maharashtra, IDBI Bank, okay, that's up for disinvestment. But the central bank, the government holding is very high. So the free float right now is something which could be also a function of what is happening in terms of the intraday action. A lot of these stocks may not be marked for delivery, but the temptation to buy a 2-digit stock, the temptation to buy these high beta names is so strong that I will not be surprised that today, by the time the stocks will settle down, they would have traded multiple times of their free float. So imagine whatever is the free float in the market, by the time the data will come out, it will be multiple times of free float. And typically when that happens for 2 or 3 days, those stocks, they hit a pause button. Look at railway stocks now. They've officially stopped climbing. Naresh, how would you approach the railway stocks now? The linear move is getting over. But do you think they will turn volatile or they will crack?
So once we have had such a huge rally in a sector, we don't crack off so easily. It takes time. So the viewers, they'll go sideways more than say go down a lot. So you don't expect more than a 15 to 30% fall in most of them. And they corrected 15-20% in the last fall. So the viewers, as of now, let them consolidate. Not the place to focus, not the area to focus as of now.
Point taken. Kunal, what's your view on Titan? Is it seeing a bit of a breakout right now, and ease my trip?
Yeah, ease my trip again. I don't track that, so I'll skip it. But I think Titan is a very interesting name because the stock went was at sub 1000 levels almost a month back, month and a half or back. It looked like that the stock was getting into a breakdown mode, and it's been almost 1.5 odd month, and the stock has shown a V-shaped recovery, breaking past about 3,200 to 20, which was the previous high that was in the month of July second half. So it's managed to cross over those major resistances, which means now we are talking of 3,200 acting as a fresh base or a support for Titan. So it looks attractive. Today's move also reinstates the fact that the stock is trying to get into a breakout mode above that a breakout zone of 3,200 level. So keeping that as a stop loss, I think traders can hold on to the long positions.
Okay. Well, earlier in the day we had interaction with Atul Surya in PSU Banks and also Gautam from Motilal Oswal Securities on where they feel that the PSU banking space in the near term is headed. Let's revisit an excerpt of that conversation.
What's surprising me is that after a phenomenal 22, they're also having a very good 23. And that really shows that, yes, when decadal trends change, it doesn't end in a year. It actually gets elongated. In fact, the whole PSU basket, if you see, it's not just banks, it's defense stocks. It's a lot of these, infra kind of plays. These are like everyone, people who've been in the market for 20, 30 years have sworn we'll never buy PSUs because many times in their life they tried and they burned their fingers. They've given back 40, 50% drawdowns that have happened.
If the policy momentum disrupts in any way, irrespective of what is happening to their business, if there is a policy change, then the PE multiples can crash.
Okay.
Because they're end of the day government entities. Their working capital balance sheets are very different because their biggest customer is government. Second, if for whatever reason the execution suffers, a lot of things have to fall in place for execution to materialize. So even if the policy momentum is supportive, but execution is not supportive and execution falls apart, then there is a possibility of a crack.
So that's the view coming in on defense, PSUs as a pack and also the banking names. But Varun, coming back to the conversation, you don't track the defense names too actively, but then which are the spaces where you have the top bets within?
You're very positive right now on autos, and particularly not only autos, but the discretionary space overall. So if you see there's a rising trend which is going on, everyone's trying to upgrade. I have personally met about most of the auto companies recently in the last couple of weeks. And what I'm gathering is that there is a big surge in terms of what people are wanting in terms of premiumization. I met the two-wheeler players, met the four-wheeler players. Everyone has a view that people want to buy this premium and the super premium vehicles, and also in that they want to buy the topmost category. So my biggest bet right now is two-wheelers, very positive on all three, Bajaj Auto, TVS, and Hero MotoCorp. So these three are the top ideas there, which I would like. Apart from this, I think there is also a clear trend in terms of CVs, that CVs are also doing well. And the trend is continuing. They are in an up cycle, which is going on. So autos, particularly overall as a pack, two-wheelers, four-wheelers and CVs looks fine to me. In terms of discretionary, I think the trend in these pipe companies, cable companies, etc., are going to continue. So we remain very positive, optimistic there. We are very positive on the entire cable space. Polycab is one of the ideas which we really like. Obviously, it's had a great run, but that's for a reason, and that's continuing also for a reason. Because the outlook for the next at least 1.5 to 2 years looks very optimistic. So yeah, I mean, particularly the discretionary spaces where we are very, very positive.
On discretionary, especially the two-wheeler names, and also of course like Polycab, which has been doing rather well for itself, in fact up 45% in the last 3 months itself. But coming back to the market, and of course the stocks which are buzzing around continue to be banking names. So in my list of the top 10-15 stocks, it's banking names all the way, and then there is DB Realty. There's an Electronic Smart India, there's an SJVN, and then some other names like KIOCL, etc. are also featuring in the list. But also wanted your take regarding the diagnostic companies, because Varun, recently we've got a lot of reports talking about how the discounting war and the competition seems to be abating as far as diagnostic space is concerned. Any comment of view there?
Again, I mean, we don't have coverage of the diagnostic space, but just to mention, they saw the best of times when you had something like COVID, which was there. There was a reason why these companies were doing exceptionally well that time. that part is behind us. So that's where you're seeing the discounting war, etc., happening, because they're not getting that kind of revenue stream which was there that time, right? And doesn't look like that in the near future we're going to struggle with something soon. So probably that's the reason why there is a little bit of a discomfort amongst investors also in this space.
Taken. In fact, on that note, let's slip into a very short break, and as we do that, listen in also to the commentary coming in from Thyrocare as well as Dr. Lal Pathlabs about the competition and pricing in the sector.
Our core markets of tier 2 and beyond, continue to see healthy growth. We continue to expand deeper and deeper into India, and that strategy has been going well for us, quarter on quarter as we've been reporting. On the price front, I'm definitely seeing an easing off of price competition.
We talk about our company. I think we have seen sequentially also we've seen good traction, and going forward, I am very hopeful that we will be doing good, because the competition which was earlier is now stabilizing here. So I don't think price increase on routine is something we are considering, but on specialized, super specialized tests, definitely we can think of.
Alright guys, now what do we have? We've got a market which is just not going anywhere, but the market rotation I think is very loud and profound. It's PSU banks all the way in terms of the real go-to space. Varun, HDFC Bank a year ago was cheap, 2 years ago was great, 3 years ago was attractive. But in last 3 years, the stock has given no return. First, it was concerns before the merger. Now it is concerns after the merger. What are the concerns, I want to know?
It has been one stock which has been on the reasonable side in terms of multiples. It's just that, if you see across the banking pack, it's not that valuations are out of whack. So just before this break, we were having a discussion where you all were mentioning that banking stocks are flying in trade today, etc. So that's there for a reason, right? Banking stocks are reasonable if you see overall as a pack. What has happened in the last few years is that we have seen ICICI Bank taking a leap forward ahead of everyone else. And in banking, the beauty is that what matters is how the overall leadership is taking things ahead and how things are moving, etc. So post this merger, people are just trying to see in HDFC how things are going to pan out, how things will be moving post-merger, how synergies will play, etc. I think it is one of the best names to own with a 2-3 year perspective. I don't have any doubt about it. But yes, near term, the move is not happening, probably because the street is just waiting to see how things will pan out after the entire merger has taken place. But it's one name which definitely at this price should be there in the portfolio.
Central Bank is up 17%, Indian Overseas Bank is locked up, Dhanlaxmi Bank is up 10%. This is exactly what happened to power stocks, right? Yeah. 10 days ago. Just about everything which had a prefix or suffix power, it went up. Yeah. Anything which has got to do with small PSU bank, it's up. It has happened in the past and it ended badly. Yes. Is this move just different, or this is just the beginning of another big move, and by the time we'll peak out? Of course we'll peak out, but the peak is still a distance away.
Yes, that's exactly the point. Peak is still a distance away because these stocks are not showing any kind of a froth, at least as of now, because the indicators are nowhere close to overbought. But the concern is that with these smaller cap stocks participating or moving up higher, and the large cap ones still lagging a bit behind. So I think SBI is still at 605, 6 levels. It's still some 20-25 points away from the previous high. 630 I think approximately was the previous high for SBI. It's still off that high. So if the large cap starts to participate, then we may expect that the mid caps and small caps could probably have more distance on the upside. But if the large caps don't participate, and that I believe in the next couple of days, then I believe that this could be a more frothy move and one should start taking out profits over here.
TVS Motors, after a while this one is making a comeback. PFC looking strong. Naresh, TVS Motors, this was like the star of 2022, and it's turning out to be another good patch for TVS Motors. How much more can this stock go, Naresh? It's at 1600 or 1540 already.
So technically looked like it would have topped out at 1350 odd levels and did nothing for the next 2-3 months, and now we are into a fresh breakout about 1350, 1400. And every time the stock has made a breakout move, same way at say when it paused around 1000 to 1200, made a 15-20% move more. So from 1400, if I were to take a similar move at say 1600, 1650 should be a pause now. And this is the way it has continued, makes a move of 20%, then pauses for 3 months, again makes a move of 15-20%. So it's been a classical uptrend for the stock, overbought and been a way bigger outperformer in the whole pack. So for now, it's time to trail the positions. Cannot buy at current levels, but given the previous history, could be 1600, 1650 where it could pause.
When the markets go higher and when the underlying businesses go higher, holding companies, they start moving up. So let's look at it. Tata Investments, Godrej Industries, Cholamandal, there are JSW Holdings. There are a lot of these holding companies which now automatically will start moving up. So if you are frankly asking, if somebody is looking for a new small theme within a theme, I think holding companies, the discount normally typically gets narrowed down when the bull market is in its full bloom, so to speak. So Cholamandal Financial Holdings, watch out for this one. You got JSW Holdings. I don't know how much holding is of JSW Holding is there in the JSW port, which is planning to go public. But yeah, I mean, this entire space now could be the other Kahoot, which could be important. Then you've got very differentiated names which are moving up today. You've got EKI Energy Services. They've got everything to do with, I think, ESG benefits. Then you've got, don't track this one, but KIOCL, I don't track this one. And then you've got GMR Power and Urban Infra. So really very stretched kind of market breadth, so to speak. Varun, so what are your top 3 ideas right now for next couple of years? I mean, 1, 2, 3 market cap agnostic.
So as I mentioned to you, I'm very positive on the two-wheeler pack. So you can pick any of them, TVS, Bajaj, Hero Moto from here. On the small mid-cap side, if you want to know an idea, I think I'll be very positive on a stock named EMIL, which we covered. So electronic marts is something which I'm very positive on. Apart from this, we are very positive. So we are working on some companies, don't have coverage yet, but yeah, we have seen some names which are looking quite promising, something like a Stylem, something like a Venus Pipe, etc. So yeah, we are evaluating a lot of names, but yet to have a formal coverage on those. But yeah, things are looking very promising from a small mid-cap side still, the way businesses are.
In the small and mid-cap space. Thanks, Varun, for making time and speaking with us. In fact, on that note, let's slip into a very short break. But as we do that, the auspicious Hindu festival of Ganesh Chaturthi is celebrated annually with pomp and joy in India. The day marks the birth of Lord Ganesha and is observed for 10 days by the devotees. While Ganesh Chaturthi is celebrated all across the country, Mumbai's celebrations are known to be a standout. Here's a special report by my colleague Shweta.
It's that time of the year when markets of Mumbai brim with decorative items and pandals set up to bring Lord Ganesha home, fondly known as Bappa.
As Mumbai prepares to celebrate Ganesh Chaturthi, the city markets are brimming with new decors when it comes to different types of Ganpati Murti, and the decorative items are being seen in the markets of Mumbai. Currently, we are at the prominent place, that's Lal Bagh Market, and you can see thousands of devotees have come to shop for the latest items that they can collect for bringing Bappa to their home. And here we see that several shops have also been portraying and displaying different types of flowers and the asan for Bappa. And not only this, we also see that the colorful festive mood is being shown in the markets of Mumbai.
अभी लेटेस्ट में ये अच्छे हार है डायमंड कट जो लॉन्ग लाइफ है, काले नहीं गिरेंगे, कुछ नहीं, जैसा आप पैसा है वैसा आप वापस भर के रखो, अराउंड अबाउट 7 to 10 years इसको कुछ नहीं होने वाला.
Well, here we are showing you the most
Right. Often the day is high, not at the lowest point of the day, can be just slip there, but it doesn't matter, 55, 60 points here or there. What's important is that in the mid-tier, in the small tier PSU banking space, the entire rising tide phenomenon I think continues. You've got power stocks which are bouncing right back up, and after that ugly Tuesday, looks like markets have moved on. Gurmeet Chadda joins us now. Let's connect with him to understand what he's making of the current market setup. Gurmeet, good to have you back on ET Now. Thank you for joining us. What do you make of the market setup? Do you think this market will continue to climb the wall of worry?
So Nikunj, I think some consolidation is due and probably should happen. There are few pockets of worry across market caps, probably more in small and micro. And if you see valuation wise, I think broadly Nifty, you're still at 19 times forward and about 22 times if you take 865 as the exit EPS. But mid and small cap, even the indices are now almost 23, 24 times. So I think some caution is probably needed in stock picking, and it happens in any bullish phase. There is some excesses which get built in, but broad market is not that expensive. I think market would probably want to wait for a formal pause by Fed as the FOMC meet goes out, and some maybe direction on inflation. I think that's been one worry with crude also climbing up, inflation being very sticky. So that's something market would want to wait. And one thing we have to remember that this pause could be for longer, which means while there could be a pause, higher rates might remain for some time, which means the valuation multiple for equity will always be questioned once market move up. So pay a reasonable price. I think there are opportunities in the market. You did mention of the bounce in the power stocks, etc. There are a lot of pockets in the market where markets are, valuations are say reasonable. So have a more balanced asset allocation.
Say in the funds which you manage and advise, what have been your top 3 additions and subtractions?
So we added, as I said, some power and energy related and utility related stuff. So we've added to our position in Tata Power. I think it's one of the most integrated plays, starting from generation, transmission, and the renewable energy portfolio. They got a refinancing done recently. At some point of time, probably they will hive off the renewable portfolio, and they have a clear goal of 25 gigawatts there, doing very good stuff even on EV charging space with some very specialized tie-ups, and they are in some bit of smart meters as well. So it gives you a complete play. We also like some of the transmission names, where there is valuation comfort, like Power Grid, etc. And tactically maybe some of the thermal sources of power, including Coal India. We continue to add, in the overall home improvement theme. I think this theme looks more structural to us. So we've added some names in tiles, in sanitary ware, as well as selectively in cement, where a lot of companies, especially in the mid and small cap space, are trading below replacement cost. In some cases, that's $50-60 a ton. So we just saw Ambuja buying Sanghi at almost $100 a ton. So I think cement probably could surprise on the Q1 earnings. And building on some large banks, I think there's been some relative subdued performance the way market has gone up. I don't think that the top private banks have done well. So we're going for the safer names there as well.
But in the last 2 minutes, there has been a bit of a sharp correction when it comes to the banking names, especially the private banking names at that. So HDFC Bank is down a good 2%, IDFC First Bank, Federal Bank. Let's pull up the intraday chart if we can of the banking index as such, of the Nifty Bank, because that's seen a bit of a correction. At least that's what is popping up in my screen. So yes, there has been a sharp fall. Even other names like Kotak, etc. are slipping a bit. But the other space which is actually seeing a bit of a correction are these textile plus real estate plays. Pull up a Raymond, that's down 5%. Century Textiles, that's seen a cut of around 4%. Bombay Dyeing, which is sort of a special situation stock right now. Gurmeet, do you have a view on any of these names?
As you rightly said, a special situation with Bombay Dyeing because of the land deal in Worli. Also, Century also has a real estate element in it. So I think you see these things popping up. But more structurally, we've been lucky in terms of being early in some of the other names there. But we are not really looking at any special situation as such. For us, special situation which we did last was Sundaram Clayton, where there was a 3-way split between the holding company getting preference share as well as the auto component company. I think this is the last special situation we did. And if you can call Jio Financial as a special situation by adding more to Reliance. So, but other than that, we don't have any sizable exposure in share, particularly in this pocket.
Buy Jio after listing? I mean, did you buy Jio independently?
We continue to add continue to add because we believe this could be something which could be similar to Bajaj Finserv kind of if you believe in that, right? I think you have to be a believer. Right now, there's not much to talk about. Even the lending book is hardly in few thousand crores. The collection infra, there's hardly people. So it will grow over a period of time, both the credit and the collection infra. But eventually, they will incubate businesses in insurance, in broking, in asset management. Asset management, especially, they have big plans. Just look at the capital infusion they have done with BlackRock, and they're stitching together a nice team. So we are trying to have a more 4 or 5 year view here. And we do understand that just because you are a disruptor doesn't mean you'll disrupt financial services as well. This is a very different space. So for example, the largest seller of commercial vehicles is not the largest financier of commercial vehicles. It's Sri. It's not Ashok, Hinduja Finance or Tata Motors Finance, right? So this is a very different game, but we believe they are stitching a good team, and I think they have the resources, the capital, and the team to do it. So we are taking a more 4 or 5 year call and trying to add more NGO financials as and when we get good price entry points.
Bit of a faith right now when it is about geofinancials, and on that basis Gurmeet has been adding positions. But Gurmeet, it's also been a week and a month of quite a bit of action in the primary market. Anything that caught your attention? Because a lot of these urban discretionary consumption names, hotel industry as well as Yatra etc. are coming to the markets. Anything that you are tracking?
The last we did was one of the pharma names, which we did. Other than that, we haven't done much. We are looking at Tata Technology. That's one name which really excites us. Again, from a very long-term perspective. Again, we need to see at what valuation it comes in. Travel we continue to like, so we continue to own Indian Hotels and Lemon Tree in that space. Lemon Tree has commercialized another asset in Mumbai, one of the large ones this quarter. And you have a World Cup, there is Miss World pageant, G20 just got concluded. So in general, as well as the propensity to travel and spend on leisure has gone up. And also I think one structural change which has happened in hotel is the model. I think they've worked out the capital allocation model well. It's a nice mix of management contracts versus owned hotels. If you see incrementally, they're adding more keys in terms of management contracts, which makes it more asset light. And I think that's one learning which I think in future the multiple could justify what they're right now trading at. It's just because if you consider what the new model is right now, some of this valuation may sustain. So I think there's need of momentum here in terms of earnings. And as I said, the business model also has changed.
Okay, point taken. So that's a view coming in on some of the hospitality names. In fact, the other big trigger, apart from, of course, the Fed meeting, where the outcome we'll get on Wednesday night. The other one is, of course, the Parliament session, which started today. It's albeit a small session, just 5 days, but in the words of the Prime Minister, several historic decisions are likely to be taken. What is on the agenda and what could be those decisions? Let's go across to my colleague Prakash.
The special session of Parliament has begun today, which is a 5-day session. It started with an inaugural speech by the Prime Minister in the Lok Sabha. However, just ahead of the formal functioning of the Lok Sabha Speaker has congratulated Prime Minister and the nation on grand success of G20 summit. While initiating the discussion on Parliament's journey of 75 years, Prime Minister has mentioned the all big successes India has achieved in the last few months, right from Chandrayaan 3 to G20 summit. Since it's the last day of functioning in old Parliament building and the functioning will resume in new Parliament building from tomorrow, Prime Minister has remembered the all historic moment that the old Parliament building has witnessed in last 75 years. Prime Minister has mentioned the all important political legislation and economic development that the old Parliament building has witnessed. He has specifically mentioned the development that is with regard to implementation of GST, OROP and 10% reservation for economically weaker section and so on. So these are the important milestones that the Prime Minister has mentioned in his speech. When it comes to important bills that are listed in the business list for the special session of Parliament, that include important 4 bills. To begin with, the CEC and EC appointment condition of service term of office bill 2023, which is most controversial, and opposition parties have shown their apprehension. Moving ahead when it comes to some another important bills, that is with regard to the Advocates Amendment Bill 2023, the Press and Registration of Periodicals Bill 2023, and the Post Office Bill 2023. These bills are there in the list of business for the special session of Parliament. But the opposition parties are very much skeptical. They find no warrant to call a special session of Parliament to get this bill passed. So they are expecting some big decision that is going to be taken by the government during a special session of Parliament. However, they have already demanded government to introduce women reservation bill during current session in order to take political mileage.
Left tomorrow's a holiday. Let's just start getting some trading ideas. Nuresh, it's a holiday tomorrow. You may come back and then you will have the Fed decision. What should a positional trader do, especially in sectors like banks, railways, and defense? Purely a trader for next 2-3 days.
Time to get out of at least the PSU banks, which have rallied a lot. The larger banks, nothing much has happened, so that's a hold. Defense and railways, if you've bought at much lower levels, it's a hold, not a buy at current levels, not a trade at this prices.
Kunal?
So in terms of BTST trades, I'll recommend two stocks. The first one is actually buy on Coal India. Now that's a stock which I think is looking attractive at current levels. So would suggest a target of 300 for Coal India, stop loss at 270. And NTPC is also another stock which has made a decent comeback after a minor correction, 7-8 points, I think last week. So that's also a buy. 255 is where I would aim the targets for NTPC, stop loss 235.
Okay, so those are the trades and the BTST ideas coming in from our charters. But what's happening in the dealing rooms and why are the dealers talking about Metropolis Healthcare? Let's go across to Sharat to find out just that.
Focus, we are having Metropolis Healthcare, and what we are gathering from the dealers is that buying is being seen in both the accounts of the HNIs as well as some proprietary accounts. Now importantly, if you look at the volumes also, that has also risen, and the dealers are stating that there would be at least a 20% upside potential going ahead as well. Now we did check the delivery volumes also, and on a 7-day average basis, it is still above the 35% levels up. Now fundamentally also the diagnostic stocks have been buzzing, and the important thing is that the price discrepancy which was there between the online players and the offline players, that is expected to come down. So of course the online players did take price hikes ranging between 10 to 30% as per reports, but the overall diagnostic players, they have also started taking price hikes in their non-COVID products as well. Now because of this, the price differential that is coming down, and that is why market is sensing that there could be buying coming in for the diagnostic stocks.
Thanks so much for putting that into perspectives. Of course, the entire diagnostic space is in focus, but within pharma and healthcare, Gurmeet, which are your top recommendations?
So, we again are tracking diagnostics. Initially, we had a bearish view when the disruption happened by the new age companies. I think its consolidation is coming back to stronger names. So we tracked Dr. Lal while Q1 was a little soft because of a bit of seasonality, but they continue to improve on the test mix, right, as well as the new distribution they're setting up, both in terms of collection centers as well as the super specialty test. I think the patient realization has also gone up. It's nearing to almost per patient to about $800 or something. And I think there's a lot of inorganized market here. So we probably see some movement also, which we called from probably informal to formal over a period of time. So that's something we are tracking now. Hospital space we like, but it's just that the stocks have just run up too quickly. And as I said, in hotels, I think even in hospitals, I think again the capital allocation has improved significantly. So for example, Max is only focused on Delhi, Mumbai, largely metros, and Narayana Hrudayalaya again is more on tier 2 towns. And then we like one name which is into child pediatric care, which is Rainbow. So we are tracking them, but valuation wise again not much comfort in these markets.
Rupees for State Bank of India, there's a bit of a mid-year turbulence which has happened in some of the banks. And Kunal, it's like saying that first large cap stocks they move, then mid cap they move, then small caps have to catch up. The two sumos, if I may use the word, is HDFC Bank and SBI. And both of them are behaving like sumos right now. They're not going anywhere, right?
Yeah, I think they're stuck.
Yeah, and Bank Nifty is going higher.
Yes.
So if sumos are not going higher, where will the leadership come from?
Yeah, that's the problem with many of the sectors. Like what we saw, for example, mid-cap IT names, the IT sector, where mid-caps moved up higher, large caps, they were underperforming for quite a bit of time, but then large caps IT stocks, they made a comeback. I am not sure whether the likes of SBI and HDFC Bank, whether these stocks can make a comeback or not, because the volumes are so the volume patterns and price patterns are a bit all over the place for these stocks. So there is no sign of a confirmation of a breakout. On the other hand, you tend to see a breakout. The stocks come very close to a breakout, and then all of a sudden you see the stocks reversing, like what we saw for HDFC Bank today. So that's the problem with these names, that they are not showing signs of confirmation or follow through up move. That caps the move for the indices, because with the lack of participation of large cap stocks, the move cannot be sustainable. Yes, you may have odd stocks flying up 10, 15, 20% higher on a couple of days, but then what we are looking out for is a sector trend and a pattern in the making. That becomes a lot more difficult with the lack of large cap stocks participating.
And the Bank Nifty is gone. It is gone. Nuresh, the sumos are not going anywhere, and if the sumo stocks are not going anywhere, it's a difficulty, isn't it? Gurmeet,
So
I like the
it's
smile on
overall-
your face. Every time I say Suno, Gurmeet, you're smiling. Something you want to share about sumo wrestling here? Tomorrow is Ganpati, by the way. Nothing to do with sumo.
I just love the analogy there.
It's so true. I mean, just think about it. I mean, they are the two heavyweights. Between them, I guess the Bank Nifty, Nuresh, would be what? SBI and HDFC Bank put together would be 25-30% or maybe more?
So HDFC Bank itself is 25%, and then maybe another 10% is SBI. So
There you go. 35%
And you have
of the
another-
Nifty is not going anywhere.
and you have another ICICI which is not going anywhere.
Yeah.
Kotak as well.
25%.
So then why should one buy Bank Nifty, Nuresh? You guys are prompting
So-
me to ask this question.
So one by one, we are seeing the smaller names break out. We are very close to the breakout point. So we've not gone anywhere for HDFC Bank. But if you look at SBI at 605, the previous all-time highs is around 620, 630 band. Then you have ICICI Bank at 990, 95. The previous all-time highs are at 1010. Then you have Axis Bank, which has made a new all-time high. You have IndusInd Bank, which has tried to get closer to a 52-week high. So they're not going anywhere, some of them, but very close to it. So only HDFC and Kotak, which are 10% or more from the all-time highs. At least SBI and ICICI are closer.
Somebody's loss is somebody's gain, because it seems like select NBFCs are actually perking up when rest of the banking names are tumbling. So pull up a Sundaram Finance, that one is doing all right. REC has been doing very well for itself this year, and that continues the up move as well. And Cholamandalam, etc., from the lowest point of the trading session, have seen a bit of a perk up. Gurmeet, I know Bajaj Finance continues to be a favorite there. You talked about Jio Financial as well, but let's say from the microfinance, from the other select NBFCs, any other name that you would want to recommend?
So actually, we like the affordable housing space. The Sarfareshi Act is at 15 lakh, which means the asset recovery is pretty good. Plus, it's a secured lending, and banks do not get much into affordable housing. They actually buy the portfolios to meet the PSL requirements. So we like Home First, very good team, good pedigree. They've been tested in various cycles, very focused as well, and they've guided for a 30% growth. Which makes the case stronger. We like some of the names which are, adding more new to credit customers to the system, including 5-star, including Credit Access. So these are some of the names we like. Poonawalla, we were lucky in terms of getting very early when they acquired Magma FinCorp. So we like some of this space. It's just, but you have to be right on the credit cycle. At some point of time, this will turn. And at that point of time, you have to be quick enough and nimble-footed enough to reduce some exposure, because it will not give you much time. For now, I think we are good for probably a few quarters.
I just missed the last part. Just broke into conversation with Anisha in the studio. But did you say 5-star you like?
Yes, 5-star and Credit Access.
But why do you like 5-star, or for that matter, in the small space? I'll tell you why. My logic is that, and I've been asking this question to everybody, and no pun intended, I also like 5-star, but I like the chocolate more. But the challenge, Gurmeet, with economy is that we've seen a K-shaped recovery, which means the rural India is not doing well. Two-wheeler sales are not coming up. SME and the rural-facing businesses are under pressure. If that is the underlying bent of the economy, then why should one buy microfinance or banks or NBFCs which have a large exposure to that category or that cohort?
So, Nikunj, I'll tell you why we like. So, lending is not just ability to pay. It's also, more importantly, in microfinance is willingness to pay. And how it's also not as much as a science. So if you see the way they do credit underwriting, so there's bias towards the women owners, right? They also take different forms of collateral, which are both soft and hard, and they've been tested in a lot of cycles. Because in India you have state elections. And there are a lot of freebies and exemptions given more often than not. So the business gets evolved over a period of time, and credit is not something which everybody understands. So we are actually wary of people who actually grow too fast, especially in bank. But in these both cases, we've seen how they have done over a period of time. We track the stress pool, how the recovery etc. happens. The local guys actually know everyone in the area where they lend. In fact, for both 5-star, even UP has done very well for them. UP was considered a no-go area, for microfinance for some point of time. But that's again has done well. So I think we are, as I said, but you have to play the cycle well. You can't take let's say a 7-8 year view on it. If you play the cycle well, and when things turn, you should be nimble-footed enough to get out of it.
697 rupees, but Gurmeet, I still like 5-star the chocolate more.
Me too.
Okay. 6 minutes to go, and looks like we are in for a flat day of trade. Kunal, just when it appeared that 20,000, okay, the Nifty was comfortably cruising along, you got the bank Nifty, which now is more like a chink in the armor, so to speak. Not even chink in the armor, more like a fly in the ointment. So you're not going home with a one-day break with any great handover from the bank Nifty.
Yeah, so I think today's handover is not good for Bank Nifty, because even after such a kind of a solid performance from the PSU banking index, I was actually expecting that we may at least have a slight flattish to positive close for the Bank Nifty. We did that, I think, intraday, but that was very short-lived. You have selling back again into the private sector names. I think HDFC Bank is also trading closer to the low point of the day. So, we could probably expect that maybe if this is just a couple of days of selling and the index doesn't break below a major support, we can expect that the index would bounce back. But then the support which I would be watching out for the banking index is 45,500 levels. This was exactly the breakout point in the previous attempt for the Bank Nifty when it managed to break out and then rise to 46,200, 300 levels. So, on the way down, I think 45,500 is an important support to watch out for.
Okay, point taken. That's the take on Nifty Bank. It's of course broken below 46,000, which is an important psychological mark for Bank Nifty. But Gurmeet, before I thank you, your top 3 bets from auto and auto ancillaries?
So still overweight of passenger vehicles versus others. So Tata Motors, M&M being our top holdings in the portfolio, and we are playing the value chain completely, Anisha. So we're playing Uno Minda, Sona, BLW, Sandhar. Sandhar is more two-wheeler. Even Uno Minda has 40% mixed to two-wheelers. But all 3 cases, we believe the content value, the kit value per vehicle will keep going up. There's a lot of innovation, a lot of JVs they have done, and a lot of new labels added as well. So we want to play the complete value chain. And auto ancillaries give you a wider play because some of the names in PV and two-wheelers may not be listed, like Hyundai, Toyota, or Kia, etc.
Okay, point taken. The BTSC trade, Naresh, I think we missed yours. Tell us what's the stock that you would recommend as a BTST or STBT?
So first would be a buy in Hero Motor Corp. Momentum for the last 2 sessions. Stop loss at 3,090, target price of 3,200. Second is a buy in LIC Housing, a relative outperformer in the pack. Stop loss at 453, target price of 465.
LIC Housing Finance. 4 minutes to go. And again, this entire HFC space, my reservation is that this space is getting very, very, very competitive. You look at any of the HFC stocks or any of the companies which are in the HFC space, unlike what appeared 5-6 years ago, that one mega trend in India is that India needs more houses, which they still do. Housing finance companies will only grow and grow and grow. But then came the competition. Fintech, big giants like SBI, even HDFC Bank now is thrown their hat in the ring because post-merger, if they are going to grow, they are going to be growing the retail, their HFC portfolio in a very swift manner. Earlier they were a distributor for HDFC Limited. Now they will be able to, now they can, in a sense, go out with commanding products because of the reach and because of the distribution. So Gurmeet, closing comments. HFC, on paper, great, fantastic, powerful, but companies have struggled here.
No, they have, Nikunjan, and I agree with you. That's why I said we were to affordable housing with Home First, and we don't hardly have any exposure to HFC. And then we said, the banks actually collaborate they don't compete. And I think also in HFC you have to get the model right. So mortgage is about focusing on what geographies and segments you want to do. If you want to do Delhi, Mumbai, urban, you can't compete with banks. Because the cost of funds are lower. The rate is lower, and NBFC, the cost of funds would always be higher. Plus, some regulatory arbitrage has also disappeared over the period of time. A lot of regulations by RBI. So play the affordable housing more, in my view, and get into more digital lenders which are expanding the net base rather than competing with banks.
Okay, so that's the take coming in. That's the word as far as some of these housing finance companies are concerned. But on that note, Gurmeet, we'll let you go. Appreciate you making time. In fact, Kunal as well as Naresh, appreciate you as well joining us on the show today and talking to us about the technicals of the market, because it was a very steady show at the start of the trading session. In fact, for most parts, it's only the last 1 hour where we saw that slip coming in on the bank Nifty, especially the private banking names like HDFC Bank. That's dragged the index to the level of below 46,000 on the bank Nifty, and Nifty 2 is ending just around that 20,120 mark. The market breadth was quite strong at the start of the trading session, but by the end of the day, that too has reversed for the worse. So there are more declines versus the advances. Despite all of this, the space that deserves a mention is PSU banking names. So after that 7% rally that we saw last week, today again there was a 3% rally, and that was after we came off from the highs of the day. So an IOB, a Uco Bank, Punjab Sind Bank, Central Bank, Bank of Maharashtra, they were up anywhere between 5 to 15%. The second best performing sector of the day was autos, led by M&M, which was high by 2.25%. TVS Motors, Hero MotoCorp, Tata Motors all did well for themselves. A bit of profit booking today on the real estate names. Lodha, Godrej Properties deserves mention. Metals too, wherein Tata Steel did not really play out the way we expected it to be. So it started in the green and then tempered a bit. And then, of course, from the broader markets, names like Easma, Trip, etc. were doing quite well for themselves. On the losing side, there were some of these textile plus real estate plays, the likes of Raymond, Century Textile, and then, of course, Vodafone-Idea after that massive run-up we saw last week. Today, it saw a bit of a reversal of sorts after the clarification came in that they're not looking at any talk to get acquired right now. So that was the trading action of the day, ending in the red, around that 20,120 mark. But with that, thank you so much for joining us. A happy Ganesh Chaturthi from all of our Eat In Our family to those who celebrate. But we'll see you on Wednesday morning.